How's it going, everybody? Tim with King's Options. And as you can see right here on the board, we are starting with our earnings reports that are supposed to be coming out this coming week. Looks like we've got quite a few names on there. A lot of financials on there, actually. Plus, you got some bigger names. You got like Netflix, that's in there. Um, Halliburton's an old buddy of mine. I see them in there. Not such a big name anymore. Fastenal, though, is definitely a one of those bellwethers for the industrial sector. Yeah, so basically, I'm saying words here, so you get a chance to either pause this or take a screenshot or go look it up for yourself. Earnings Whispers, uh, my favorite calendar for this on X. Highly recommend going and checking them out. All right, let's go to the sector tracker, see how we did over the last 5 days. The last 5 days, the primary strength is in consumer staples, utilities, and industrials. The interesting thing is those are all very well related to each other, and the backbone, of course, of any economy. So we're looking pretty good. Things are looking pretty good, and it's bolstered by real estate materials and energy, also coming in pretty well. Tech is looking green, however, definitely closer to neutral than it is positive, in my opinion. And then the consumer discretionary, healthcare, communication services, financials, all on the lower end of this scale. Now, depending on how you feel things are going in the economy, uh, determines where you feel you should place what it is you've got. But there are trades to be made up and there are trades to be made down here. But currently, here's where the strength is over the last 5 days. All right, let's take a look at the economic release calendar, see what we've got. Only 2 days this coming week, at least with market mover events, housing starts and permits, and then FOMC minutes. This is going to be on Wednesday, the 21st. A couple different time periods there. Those are in central time. So by all means, convert them to what you need to convert them to. And then Thursday, we have the biggest one I'm looking for, of course, is going to be the GDP. What is GDP doing? And I expect GDP to not look so good. I'll be perfectly honest with you. I think we're going to see some of the effects of the uh, uh, recent developments, and as they hit late into last year. But I also expect this year the GDP to actually see a bit of a climb. I have my reasons. Um, Not the least of which is, of course, the amount of taxes people are going to be able to hold on to through the big beautiful bill, which is going to be quite substantial, especially for those on the lower end of the scale. So keep that in mind moving forward, and that could definitely push the GDP. Um, and that you see, what am I thinking? Unemployment numbers. Thank you. Unemployment numbers are down, and they've been going that way consistently, which is nice. Incidentally, they also will be coming out same time, same date on Central Time on Thursday. So keep an eye out for that. Right now, the consensus is obviously that they will go up. We'll see how that plays out. All right, that's taking a look at the behind the scenes. Let's go to some charts. No, we'll get back to NQ. Let's go over to RTY first. RTY kicking it up high there. Looking very nice. Again, these are smaller cap businesses. We do have to change some lines, I think. So I'm going to go with the biggest swing down, probably going to be at this swing low. If this were the whole thing were to falter, that's where I would expect it to falter to. Moving to the upside, I mean, I could run some Fibonacci's if you wanted and get some extensions going. But here's what I mostly look at. I don't really use Fibonacci's except for certain things. And it's definitely not to predict. I don't like to predict. What I do see is that we are at the third ATR on a Keltner channel, which of course runs 70% or greater probability of some form of reversion to the mean. So we could definitely see some pullback. If we do pull back, I think this is still a nice solid level that we can pull back to, because everybody that got in at these levels is going to want to keep this alive. And if we do break below, then this would be the target below this level that I would expect to see, where people go on the defensive again and say, nope, we're going to hold on to this. And then this one here, of course, at the next swing low to the downside. You could go here, and in truth, there may be an argument to be made here. But as far as just larger levels, I'm not going to mark it. I'm going to leave this as the next swing low that I'm concerned with. Should it start to head to the downside, and we're going to move right on over to the YM. You're going to have a little more detail in the ES and the NQ. As far as we've got here, I'd say it's time to go ahead and mark this. We've got all-time high, but more importantly, it's turning out to be a resistance level as well. So we've definitely been shuffling sideways, which is a good look for this. I mean, we've made a nice move up. I mean, this was pretty orderly. We've been bouncing right off the 21, moving close to between 2 and 3 on the ATRs, pulling back reversion of the mean, popping up again, and we've been at this point creating a little bit of resistance. Now, there's going to be a lot of liquidity up here because all these people that sold at this point have all their stops right up here. And that's the biggest pool we got. That doesn't mean we don't do, say, a liquidity run first, where I would expect to see it probably drop down to as low as there. And that's based on both this candle, but this one setting the actual baseline for anything that I would look at as a pullback, possibility to run to. Now, the next thing I want to do is go ahead and mark what would be the shelf that we might fall off of if we were to turn around. And that would be here where we have liquidity. We got a couple stops, bump, all the way down. But really, this is where that shelf begins, and you've got liquidity to the downside. So yeah, that's as far as the EM looks. Let's go to the ES. Or YM. That's as far as YM looks. Let's go to the ES. There we go. Can't talk today. This is a very pretty chart as well. Looks very, very similar in that we are setting the same resistance level. Nice resistance level up here at the highs. Not necessarily as strong or moving as sideways as YM, but still very pretty. We're also only pulling back to the means from this drop. 21, a little bit past, bounced off the 50 day, but 21, 21. Do we continue that trend and just keep moving up? We certainly could. It's possible. Where's the shelves if we fall off? Well, the first thing from this section up here is going to be pretty obviously right here. Anything below that's going to be a liquidity run, and anything below there is going to be down to here. Now, this is a little tighter together. We've been consolidating a little longer. But beyond those two levels, we've got a nice even drop off. You know, these are fairly well spaced as well. The thing I'm looking at. But pretty well spaced. If we did drop below that second one that I've marked, this would be the third one that I would figure would be the next target down. And then you have a huge liquidity shelf that becomes right here. As a matter of fact, you see this, I'm going to leave that there and move this liquidity to the actual shelf that I'm seeing right here. Big block of gap between that swing low and that swing low. So possibly a lot of stops in this area. All right, now a time for my favorite, and the one I trade the most is going to be the NQ. Now this got a little different picture here. It's a little bit same, a little bit different. So we keep trying, go ahead and do that. We keep trying to peak up above this topping-ish area, right? I want to take as an average. And we've only closed one day above it. I was hoping to see a matter of that, but it did reject. However, we also only keep dipping down. I mean, we saw the 50 here, we saw the 50 here, only seeing the 21 here. This is kind of moving sideways. A big problem right here. But, you know, do we continue to keep moving sideways? There's a lot of liquidity up here. Now, maybe this is a little liquidity run, but we've also got all-time highs up here as well. So interesting spot to be. Hard to trade. The last couple of days have been, for me anyway, or really most of the week has been a whirlwind of initial excitement as the market bell has rung. To the downside, I think I would worry more about this level than this level. Now, this is going to be obvious and immediate. Also, the fact that it's 50, but it's, you know, moving straight across sideways. So if we dropped here, I'm thinking we could actually see some people try and push here. This could be one of those gotcha where people would put in, okay, it's going to reverse somewhere around here, and then it proceeds lower and takes here, because this is a much larger liquidity shelf than this. And I just think that it would naturally head towards the larger liquidity shelf. Now, I'm not going to leave that line there. We are going to leave this one here because that is ultimately the largest liquidity shelf we have. But in between these two, this is where I'm going to go ahead and set this. And this is the one I'm looking at. If we get below here, I would expect to come here. And if we come here, I could definitely see them pushing into liquidity in this point just to soak up this. Soak up the sellers. I could see that. But that's a good ways down. I mean, think about it. We're sitting currently at, where are we at right now? Close here was 25,679. So this level right here is 24,888. It's like 800 points down, ballparkish, and that's just that's a good move. Would it happen in a day? I mean, it could definitely, but is it likely? No, it's not likely. We have seen it very infrequent, but it's possible. Anything's possible. No, I would expect actually that we start seeing these levels and seeing some minor resistance. We do turn around, seeing some minor resistance at each of these levels, all the way down to this liquidity shelf, and then from there, that's going to be the big test. Okay, and then of course below that we have this one here. Now, I've been enjoying trading this past week, although it has been a challenge to begin with. I have still been enjoying that. I do want to go out to a weekly chart, which apparently I don't have as a default. So let's go ahead and find one. Intraday, that's fine. Let's go out to a week. Okay. And the reason I want to go out to the week is mostly because it looks a lot more structured if you come out here to the week. Now, don't get me wrong, we still kind of see that rising top. So there is a topping, but you can see that it tends to be a little bit more progressional to the upside. And we did pull back at the end of this past week, which you can see here. But we didn't drop down and start taking anything out. So I'm kind of curious to see how this works out in a larger level. We also are probably about between a 1 and a 2 ATR. So we've got plenty of room to move up. We could also definitely see a reversion to the mean, which this happens to fall on a weekly level. This is a large time frame, remind you, but we could fall on this reversion to the mean very easily and then bounce from there with no issues. Still be super clean. Now that's a large time frame picture. I tend to be an intraday trader myself, so I don't really give that a ton of credence, but it is something I wanted to show you that it looks a lot more orderly on that level. No, I will stick with the daily as my main, and we've already got the description for that. So I hope you find that useful. I hope you join me next week. And until that time, trade safe, be well. We'll talk to you soon.